Hello, good morning. It's Wednesday the 5th. I'm FxPlew and this is the market brief. So Hugh Pill has been on. He's the Bank of England chief economist and he believes we need at least one more rate hike to get the job done on inflation. The MPC remit needs monetary policy to deliver a clear path for inflation to return sustainably to the government's 2% target. And Hugh Pill thinks they cannot be sure that they've done enough to ensure that just yet. Meanwhile, independent MPC member Silvana Tenreyro, she's also been on with a rather contrary view. She thinks they are risking a significant inflation overshoot, and that would need rates to be cut further down the line, probably in Q4, in order to address that issue. Shots were fired. As that debate continues, the current expectation remains for another 25 basis point rate hike at the next meeting on May the 11th. And then, chances are they'll announce a pause in rate hikes. Over in the US, economic data has started to point towards a recession later this year. The Fed has raised rates to the point where they are actively restricting demand now, so they need to tread very carefully going forwards from here. Indeed, there is suggestion that they may even abandon plans for one final rate hike at the next meeting in May. Yesterday's job opening data certainly didn't help the case for another rate hike when that posted a dramatic fall. That's ahead of Friday's non-farm payroll data. And ahead of that, JP Morgan CEO Jamie Dimon has been on. He's been warning that rate hikes could cause a recession for months now. And in his latest note to investors, he explained that he is not comfortable that the issues from the Silicon Valley Bank collapse have abated. This has impacted the risk appetite that the banks have towards each other, and he fears this could lead to another credit crunch. He also warned that the wider economy is in danger of a full-blown slowdown led by falling employment, which may turn negative. I guess that negative Nelly would definitely be on #TeamUnder if he played his part in the non-farm Friday sweepstake. Meanwhile in the market, the dollar correction may have formed a trend. Yesterday the dollar index fell through major support at 101.70 and reached 101.45. Meanwhile, sterling continued its recent rally against the dollar, reaching 125.25 and posting the highest close since June last year. We kick off around 124.95 against the dollar, about 114 against the euro, and euro dollar is around 109.60 on the open this morning. That's it from me. Have a great Wednesday. All the best.
If you do not have a clue, then just tweet through and ask FxPlew.